Welcome to another video. I'm in Prague right now and I'm here to find out whether my investments in Fintown are safe. So today I will visit the platform's headquarters, talk to the founders and ask questions to determine the platform's biggest risks. If you are interested in earning passive income by investing in rental properties in Prague and want to learn more about how the platform works behind the scenes, this video is for you. You should note that this video is no investment advice. The goal is to give you a fair representation of Fintown as of today. Remember that things can change in the future, so you should read our Fintown review on P2P Empire to verify whether the information is still accurate. Before we begin, I want to let you know that this time Fintown is covering the cost of producing this video. With their support, you are able to watch this for free. However, I have the complete liberty to say what I think about the platform, and the company does not get to see the video before it goes live. So now that we have that out of the way, let's go meet Alexei, who will be my guide in today's mission to determine whether Fintown is safe to use. Good morning. All right, Alexei, so what are we going to see today?
Today we are going to Ricany Group office in Prague. We will be happy to meet you with all our team. We plan to discuss questions that will open more information about how we work, how we operate, our properties, about Fintown, about Ricany. We'll try to cover everything.
You should know that Fintown is operated by the team running the Ricany Group, which is an established developer located in the city center of Prague. Fintown manages your investments from its headquarters, so let's have a look at their office.
Hi, let me give you a quick tour of our office and our team. Here we have a lounge zone area for meeting with guests and our beautiful office manager, Anna. Let me show where our management sits. They're actually having a meeting right now. Next, we have our financial department. The ladies are in charge of all the payments. And here we have our development and operations manager in charge of all the projects. So if you are in Prague and would like to visit us, you're more than welcome.
After a quick office tour, I sat down with Maxim Vihorev, the CEO and co-founder, to discuss some of the platform's current developments and risks. If you haven't heard of Fintown yet, you should know that it's a crowdfunding platform that offers between 8 and 15% interest on investments in rental or development projects built and operated by the Vihorev Group, which Fintown is a part of. In simple words, this means that when you invest in Fintown, you are not funding third-party loans, which is often the case in other crowdlending platforms. This also means that you don't have to rely on other borrowers to repay your funds. The Vihorev Group is in total control of the construction and management of rental properties, as well as the repayment of loans you are investing in. When you invest on Fintown, you're basically refinancing the developer's equity so that the company can use the money to build more projects. Those will be rented out to generate a monthly rental yield. About a year ago, I recorded a video about Fintown to teach investors how it works. So if you are seriously considering investing on Fintown, I suggest you pause this video and watch our review. Today we will expand on that information, look behind the scenes and answer your questions. On Fintown you invest in a mezzanine loan from the Vihorev Group. Your funds are not secured by a mortgage. However, the Vihorev Group offers a group guarantee, which is a promise to repay the debt. This type of guarantee does not have so much value as a mortgage, so it's crucial to determine whether the company could actually cover its obligations to investors. To do that, we have to review the financials and evaluate the sustainability of the business model. The Vihorev Group's management gave me access to the consolidated report for 2023, which provides a better picture of the company's performance. At the end of last year, the company reported 36.8 million euro in assets and 30.8 million in liabilities, which consist of bonds, private loans and senior loans. Private loans are any other type of financing outside of the bank. As you can see in this pie chart, most of the funds last year came from the bank, Sika, Vihorev's funds, and Fintown. Since investors are refinancing part of the company's equity, it's important to examine projects' financing structures and valuations. Ricany is WHRF's largest project and it should start operations this month. This table shows the market value based on the latest independent evaluation of the property, the liabilities and the LTV. By the way, if you want to check the evaluation reports, you can find them on the project page on the Fintown platform. What's also interesting is the amount of funds financed by the investors on Fintown. If you wonder why, it's because the WHRF Group offers a group guarantee for your investments, so if something happens, the assets will be liquidated to cover the debt. Since your investment is a mezzanine loan, you will likely be the last one from all the creditors to get your money back. However, as long as the assets are liquidated around the market value, there should be enough funds left to pay you back, even if the asset would need to be sold at a discount. For further information, you should review the loan-to-value ratios in the report. Fintown provides you with the numbers for all its projects to determine the risks associated with your investments in individual properties. You can also review the liabilities and assets more thoroughly by scrolling through the report. Now that we have determined that the value of the assets should cover your principal on Fintown during normal market conditions, we can review the income statements for individual companies under the WHRF Group. We have crunched the numbers and this is the result for 2023. As you can see, many projects haven't generated enough revenue last year to become profitable. Karlin opened just a few months ago and Ricany is about to open right now. So the efficiency of the operations should improve this year, which will lower the costs and increase the revenue. Only then we will be able to evaluate the sustainability of WHRF's rental business. As we are recording this video, we can only review the unaudited report. The founder of the WHRF Group informed me that the audit is ongoing and should be completed in 2 months. So if you are interested in the auditor's opinion, you should keep an eye out for its publication on Fintown's blog. One crucial aspect of the development business model is liquidity management, which represents the company's ability to cover short-term obligations while having sufficient funds to develop and manage properties. This is important because as an investor on Fintown, you invest your money for a specific period, and if you want to exit, Fintown should be able to pay you back. The platform offers short-term and long-term investments. A popular investment is Fintown's Flexi projects, which offer an exit option after 30 days. Fintown has roughly 20% of its portfolio allocated to Flexi projects, meaning that those funds have to be liquid on Fintown's account to meet investors' potential withdrawal requests. During my visit, the CEO confirmed that Fintown can meet 100% of potential withdrawals from Flexi projects. He shared, however, the goal of the Flexi project will always be limited as it's not sustainable to hold so much money on the account. As of right now, how much of potential withdrawals you can expect and how much you have on your accounts? Do you have 100% or?
Yes, we have, yes, at this moment we have like 100%. We have something like 1 million or something more than 1 million euro. And then so it's more to cover, but it's very important to understand like this project, of course, it's very interesting for the investors to start like participate or to get to know our like platform. For us, it's interesting in the future for people to, and that's actually what is happening, to transfer to longer projects. Because for us, we're interested, of course, much more for people to participate in projects 2-3 years and so on. But we understand that at the beginning for people it's much more interesting to try how everything works with this kind of Flexi project. But of course, long term for us, it's not interesting to have 80% in Flexi because it's very dangerous for us. So at this moment, it's something like it's only 5th part, I suppose, like maybe 20% of all of it. And it's like introductory product for the investors. And then people flip to these longer projects, 1, 2, and 3 years. And in long term, of course, we hope that most of the investors will be staying with us in these long-term projects. Exactly in regards of this liquidity, because we have to hold all the time some kind of this money. So for example, when we actually offer 8%, for us it's at the end, let's say 12%. Because it's
cost for you.
Yes, because we cannot use all of the money. But we have to offer certain kind of product because people like it.
As liquidity management is one of the key aspects, I also asked Maxim what he would do if Fintown or WHRF could not meet investors' withdrawal requests.
In this like really worst case scenario, we always have some time to refinance it or even sell some of the units to cover these problems that we have. Because if we had all the projects in the development stage, then there is not too much things you can do until the project is finished. Because if it's just in the middle of the construction, what can you actually do? Like you have to finish the construction for you to do something with this and to take some money out, because all the value and all the money are in the projects. The most important question, can you pull this money out of the project? If it's in the construction, it's like still like very limited. If the project is finished, then you can pull out any kind of liquidity with different sources. First, you can like hire the senior loan and refinance it. You can sell floor, you can sell units, but you can do something at least with this.
So as you can see, should the company struggle, it always has the option to sell parts of its assets to cover its short-term liabilities. There are several factors that you should consider. A rapid sale of assets may result in capital loss. On the other hand, the real estate market in Prague is growing rapidly, which means that the value of assets will likely increase over time. If Fintown faces liquidity issues in the future, the value of the assets would also be higher in relation to the debt to investors. The good news is that due to WRF's unique focus on rental serviced apartments, the company would not need to sell the entire building. It can sell units in already existing and revenue-generating properties, which, as you may know, is a great business opportunity for potential buyers. As with any company, however, there are some risks that may affect its operation, so let's hear what Maxim has to say about them.
The biggest risk in our field is actually persisting high interest rates that are already like going down. So we had this unpleasant time when interest rates just like jumped like 7 times, like from 1% to 7%, like pre-war. So it wasn't pleasant, it wasn't complicated, and it's actually the biggest risk for any developer in any part. So at least we're at the stage when these interest rates like are going like steadily down. It's like 2.5% lower. It's around pre-war is around 4% instead of 7%, and so on, and still like going down. But it's actually the major risk for development, because if it hit in the middle of something and you do not like have it covered. But our main credo is to be prepared always for the worst and hope for the best. Like so that is the thing. So we're always waiting for the hit from any side. But financing stuff is like the most important for us, because we have some plans, we are planning of the money and so on, and then once you're planning for this interest payments or this amount of money needed, and then you need it like much more, then it's always like a complication for the developer.
Off the record, we also discussed the relationship between banks and WRF Group. Maxim shared with me that even though they had a senior loan with a fixed rate, he experienced banks amending the interest rate, which forced him to change the banking partner to ensure that the cost of financing was reasonable. Outside of this risk, investors on Fintown should also keep in mind that any force majeure event may impact their investment.
Like war is also an issue that we cannot control and actually impacts all kinds of fields. And I hope it will never come like to Czech Republic, but it's a thing that you cannot control, and of course can impact like all kinds of activities of everything that is going on. And we're also working in segment of serviced apartments. When COVID came, we could flip our projects into long-term and mid-term that most of the hotels couldn't do. And of course we had lower revenue, but we had something like 75% of the occupancy rate. It was enough for us to cover interest, wages. Okay, of course we didn't earn anything, but at least we could go without any shocks for long term. That is the idea also because why we do serviced apartments and not hotels, because the hotels are very sensitive to everything that is some terrorist attacks, some things going on. So all the hotels like are empty. And that is the thing. In our case, we can flip to long-term, mid-term, and of course lower the revenue, but still go on. And that is very important. So bulletproof concept of service apartment is the thing that was very important for us to continue and develop exactly in these fields and not to jump into different, because there are a lot of things that you can do in real estate. You can do offices, you can do shopping mall, industrial parks. It's all good, but we're not experts in this. So that's why we're not jumping into all kinds of activities in real estate that you can do and trying to focus on what we understand the most and that we like gone through different difficult times already.
Some of you have also asked about Fintown's expansion plans, so let's hear what co-founder Vladislav Ciganevich has to say about that. What about the company's plans in the future? As of right now, you're listing your own projects?
Yes.
Is there any plan to list projects from other developers, perhaps in other cities or other regions in Czech Republic?
I got it. We do frequently get those questions from real estate developers. As for now, we got this from Spain. We got it from other Czech locations. No, we want to keep the platform as secure as possible, as trusted as possible, and we can get this level of trust and security by letting out the projects which are, let's say, ours, that we know exactly what is going on. And I see this as quite a huge benefit. If you would look at the platform, you'll see that the amount of defaults is zero, and it will be zero. Because all of the projects are related to us, are related to my partner Maxim from the Withdrawals group, and we don't see a reason to list there somebody else. We see it as much higher risk than benefit. And again, you all look at Jacob's channel, what recent development in the real estate investment platform, and you see that the majority of platforms actually experience problems when they begin listing everybody else, and they're all running for, hey, let's give the highest interest possible to other investors. They try to hype it, and once it begins, it's the start of the end. Let's put it like this. So we want to be trusted by our investors. We want to be a platform which we can invest into by ourselves as an investors, and which will have the zero defaults. And we can have it only by listing our own project.
This is actually something I find very appealing as an investor on Fintown. Throughout my visit, the platform founders mentioned that they are only focused on what they are experts in. There is no ambition to rapidly scale into various real estate segments outside of constructing and managing service apartments in Prague. I see this as a positive aspect, as I have experienced many issues with other real estate B2B platforms in the industry that followed an aggressive expansion plan, which in the end backfired, resulting in high default rate and capital loss. Outside of risk-related questions, we also discussed the features that Fintown is working on.
Firstly, we wanted to develop the statistics, because if you go to each platform, you can see the stuff, you can see the number of defaults, the overall amount of collected funds, etc., which we publish on quite frequently basis. And again, as investor myself, I want to see this pretty much real time. So this first step for me. I want to see all our investments, defaults, all the stuff real time, and for you guys as well. Secondly, we want to introduce the referral system. Regarding the marketplace, as we call it, the secondary marketplace, the question is simple. So you have an investment and you want to exit it early. Currently, in Fintown, we do provide this way, but it definitely goes with some fee, because we work with funds, we work with money, we need to exit this obligation. It also comes for some cost. Currently, you can do this. In some projects, you'll definitely have to pay some kind of fee, and we are working on the way for you to exit it early without this fee. I can't say that it will be tomorrow, in a couple of days, in a couple of months, because as said, we have some, it's called like technical debt, which we currently need to work on. I do hope that the secondary market will be until the end of this year.
In addition to the improved statistics page, a referral system, and a secondary market, the platform is also developing a mobile application to improve users' experience on mobile devices. An auto invest is also in the pipeline, but it is not the highest priority, so you should not expect to see it this year. After lunch, we took a photo with the team and visited the current project in which you can invest on Fintown. Our first stop was their serviced apartment building in Ricany, which is roughly a 30-minute drive from Prague's city center. This project is Vyhodev's largest yet. The property aims to attract young professionals who work in Prague and are looking for an affordable place to stay with a great connection to the city center. According to their website, 70% of the apartments are already reserved, even though the building is not officially open. This is a good sign for Fintown investors, because part of the revenue generated from the rental yield is covering the interest rate.
We are in Ricany building, which is a brand new building in our portfolio. It's a 12-floor honest apartments with co-working centers, which is first real live and work concept in Prague and also in Czech Republic. As you can see, now we are at the finish line. So after 1 month, we will be ready to operation. So please follow me. This is our co-work spaces. Which is focused for individual person, also for the companies, and they keep the fixed offices, dedicated desk, and also lounge zone in the upper floor. Now we are under 50% reservation of offices and apartments also. And our expectation revenue is about 150,000-200,000 euros per month.
After we visited Ricany, we drove back to the city to visit a rental property in Karlin, where I invested myself.
So hello, I'm happy to greet you at our honest Karlin projects. Here we have 31 apartments that is mostly rented out as short-term and mid-term, because we're in the center and heart of Prague, so mostly people coming to Prague, tourists. Here we have average occupancy around 85-90%, with average monthly revenue around 70 to 80,000 euros. This project is currently available for investment, and let me show you around.
The project in Karlin has 31 rental units, which can be rented via a booking portal or directly via the project's website. The check-in and check-out process is fully automated to reduce costs and maximize efficiency for guests. The apartments feature a fully equipped kitchen and a washing machine, which is hard to find when looking for a short-term rental. Finally, the building has a great location because it's located next to the bus station and only one subway station away from the main train station. So I believe it is a promising project. I'm now back to my apartment, so let me share my thoughts with you. I had a great impression from both co-founders. I could tell they both have experience in real estate and lending industries, which makes them a good team. They know Prague's market very well, which makes me confident about their practices. When it comes to risks, I would say the biggest risk is the fluctuating interest rates for their bank loans. However, they came up with a solution to increase the rental price when that happens to generate more revenue. The business model seems sustainable, especially because the apartments can be sold for quick liquidity if needed. Finally, another great risk to consider would be force majeure events, which we can't really predict or control. However, this could impact you on any platforms. As I record this video, I cannot spot any major red flags about Fintown. I've been investing successfully on the platform for over a year. You can find more information about this in the latest portfolio update. For the time being, Fintown seems to be one of the safest platforms in the industry. So yes, I believe my investments are safe. If you think that Fintown is a good fit for you, you can use our link on P2P Empire to get yourself a €15 sign-up bonus. The platform welcomes all investors with a European bank account who reside in Europe. The minimum investment starts at €1, so you can easily test the platform before investing a larger sum. If you found this video helpful, hit the like button and subscribe so you do not miss out on the latest news in the industry. Thanks for watching, and I will catch you in the next video.